I would like to introduce our panelist. The panel is dedicated to investment and innovation in cloud. Very, very huge subject, so we will probably not be able to finalize this issue today even. But we would let's say that we will start. And we will try to give you some overall scenario of the story. I would like to introduce on my left. We have Fabian Bender, Allianz Digital Accelerator. Maybe you can just show or say something. Hello.
Hello.
Okay. Then we have Christian Stammel, CEO Navispace.
Should I say also hello? Hello.
As you wish. And on my right, Bjorn Tremmerie, head of EU Investment Fund. And Kurt Kammerer, founder and CEO of Regify. I know that I'm not very visible here, so sorry for that. I can stand here, but it's maybe it will complicate life to everybody. So what I would like to just briefly say as an introduction that we know that the value of the US market of cloud is $240 billion. We know also that the European GDP, according to European Commission statistics, should grow thanks to introduction of cloud by 160 billion euro by year. We know the market is growing very quickly. And we know also that the European cloud strategy is giving, let's say, guidelines and incentives for creation of European cloud providers. But the question is, where is the financing for that? We have seen in the previous panels that big telecoms, big providers, they can manage easily themselves. And in addition, European Commission is providing them additional programs and help to create the cloud part of the story. But what's about startups? What about early stage companies? That will be the topic of this panel. And my first question is, what to you, gentlemen, what does it mean, investment in cloud? Who is willing to start? Maybe Kurt.
Yeah, then I start. So it's a big topic. Cloud is a big topic, as we all know, and when we started to define what it really is, we didn't come to a definition. By the end of the day, it's not a sector, it's just a delivery model that good ideas have and that can accelerate good ideas. So investment into cloud is therefore a very broad spectrum. By the end of the day, the investment that goes into cloud should probably not be classified as cloud investment, but it's investment for sectoral approaches like those that you see in healthcare, or for approaches in the financial services industry. And you should simply look at cloud as an e-delivery model. And cloud is not so new. There are many people who advertise cloud as the new thing. As we all know, cloud has been around since the first cable more or less was out there between a network and a computer. That was the very early day of cloud. What we now have is an industrialization in the cloud spectrum. But to make this long story short, we didn't, I think, come up with a clear definition of what investment in cloud is. To put things into perspective, my personal opinion is you must make a customer happy, and if you start from that end, you start from the right end of the market. If you solve a problem for an organization or a consumer, then you are on the right track, whatever your delivery model will be. And if it's a cloud delivery model, it's perfect, but that is the right end to start with. So we are not inventing a new cloudy thing, but we make life easier for people by doing the right things, having the right building blocks put together. And yes, cloud is a facilitator, but not cloud is the solution. The application is the solution that is for a consumer or for corporate or any other organization.
Okay, but I would like to ask you, the EU Investment Fund is, and this is the question to Bjorn, is investing in cloud companies, cloud providers? What does it mean for you investing in cloud?
Yeah, it's a difficult question that's holding many other questions as well. Just for those not knowing the European Investment Fund, we're an investor in innovation in Europe, but we don't do it directly. We go via investment funds, so venture capital funds. So we've got some 260 in our portfolio, and we have committed to those 260 funds some 3.8 billion. I don't know what it is to invest in cloud. Cloud is something I don't understand as such. I would subscribe to it's a delivery model. To me, the half of all the companies that I see presented by the fund managers that we back, they in one way or another, they say that they're a cloud company, either because they build an application that's delivered into the cloud, or because they develop a software as a service, or because they develop a new platform as a service. It's all linked to the cloud in one way or another. So for me, 1 out of 2 companies in our portfolio is a cloud company. It's thousands of them. But what does it mean to be a cloud company? I don't know exactly. What I do know is that for us, as a backer of innovation, cloud offers a lot of opportunity, because you as a startup, you don't have to think about CapEx anymore. You can scale now. You don't need to buy 10 servers if only thing you know is that you probably need 1 just to get going. You rent somewhere server space. You rent storage. You can scale your model efficiently. So that's something that for us is very important. We hear it from everybody. A lean, mean startup means that this startup can focus on what it does best, meaning somewhere killing a pain point of a customer and not having to worry about the infrastructure or the IT infrastructure that you need to have, because that you can source into the cloud, whomever is the cloud. So we think cloud is important. Half of our companies are cloud, but we don't invest in them directly. We don't have the skills. If I cannot understand or explain what cloud is, I can definitely not invest in it. But I do back teams and venture capitalists that do invest in the cloud.
Thank you, but I suppose that you have some financial analyst and you read maybe some business plans.
Well, not directly. We read the business plans of the teams that come to us and sell their strategy in terms of we're going to invest in this segment. And the cloud is so big. Even we have clean tech programs also backed heavily by the European Commission. The European Commission is not only about giving money to the large corporates. We manage a billion euro program to invest in funds that will back startups. Some of them are in energy efficiency. You don't need to put your data center on the North Pole because you need cooling. If you invest in innovation, you might manage the energy efficiency appropriately to run it even in Luxembourg. Some of the best data centers are run in Luxembourg. So all thanks to innovation of startups that have been backed with financing from various parts of the world, including the European Commission.
So Christian, what do you think about what will be the revenue model attractive for investors as far as cloud is concerned?
As we are driving open innovation programs worldwide since more than 10 years, and we are facing every year around about 600 to 700 entrepreneurs, we know very well what it means to do business with ICT or with cloud solutions. But the problem, or what Bjorn already mentioned, it's a big opportunity at the moment to deal with cloud solutions, because you don't need such a big investment. But when we are talking about early stage, we need early stage investments. And the VCs, which are backed by Bjorn, for example, they are normally going not directly in early stage, right? So we or not so much, but we are talking really about very, very early stage things. We are talking about sometimes companies which just need 150 to 250K. So, and there we see at the moment a big lag. Sometimes it's covered by national banks, which could cover that. But nevertheless, we see at the moment a lot of solutions coming up in the cloud area, based especially in the healthcare sector. We saw a lot of API-based solutions. We saw a lot in the smart energy area. It's growing.
If I just may intervene on that, it's true, following the dot-com crisis, many investors in the early stage, they said, oh, this is not worth it, we lost all our money, we're going to go later stage, because later stage is less risky. But then who's doing actually the early stage? And a lot of the innovation happens at the early stage. Now what we've seen is that because it's becoming easier to do your startup thanks to all these solutions that are offered over the cloud, you don't need the big million euro dollar rounds anymore to get your startup going. Right. So now what we've seen since a couple of years is that there's actually a whole bunch of VC players that are again going in the very, very early stage segment. And I would dare to claim that the whole cloud industry has contributed to that, because they made it more cost efficient to actually launch your startup. And it's not yet as abundant as I would hope, that the financial backing for early stages there. So we need to continue playing a role at our level, making sure that there's enough financing available for very early stage, a couple of 100,000. And there as well, one of the things that we learned is that there's a lot of business angels out there, and they write tickets of 50 to 100,000 euros. And we're thinking at our level of putting in the market now co-investment schemes with business angels, so that even the companies needing only 50 to 100,000 can get the funding as well.
Or corporate accelerators.
Or corporate accelerators.
Yeah. Well, this is the I was going to ask Fabian. Okay, but to boost European market, and to which is the value of it is now about 100 billion euro already. But to accelerate, how do you plan to do it? What you did already, you invested in few companies, and you act as an accelerator. Is it an issue for cloud industry, for small startups? We know that small startups, they cannot get credit from the bank. They will not get financing, maybe via business angels, but that's all. They will not go to VC, because VC starts to invest from 5 million euros. So to take 30% of the company in and negotiating. So?
Like several things on this. I guess we have, especially in Germany and Europe, a healthy structure also of small tickets. There is a lot of money in the market, and sometimes it's about like there's a battle for which VC invests in my company or not. So this on this thing, I think it's getting healthier and healthier. What you just heard from Bjorn, that they already they think about to back. Is it better, sir? Yeah, okay. That they think to back also business angels to co-invest. So I guess it's a healthy structure there. In terms of like cloud and the accelerator, I mean, what is the accelerator, the Allianz Accelerator? We want to accelerate business models which are close to the insurance business. We want to be a hub for startups and entrepreneurs who are just having the idea and want to execute it with one of the leading insurance companies in the world. And there, again, I see it in two ways. Cloud is actually an accelerator for us as an accelerator, because what Bjorn said, you don't have to think about anymore in a P&L structure about IT setup, because for the first month, it doesn't matter. It's cheap and it's easy to use and it's easy to integrate. And the second dimension, why a cloud is interesting or a topic for Allianz, is rather like from the cloud perspective itself, which means I just attended 3 panels or 3 discussions here, and on every single PowerPoint I saw one thing. It was risk. And it's dependent on risk, and that people or the whole cloud business going to accelerate. And insurance companies by default manage risk. So of course we have an interest in this, and we think, if you think a little bit out of the box, not the technical view, rather like the business model view, that there is a lot of potential that we as an insurance company can tap in here. So this would be like, hope it answers a little bit the question.
But to be more even precise, would you gentlemen draft a profile of investor which is who is investing in cloud, in a cloud company? Would it be institutional investor, individual one? Who invests in cloud? High risk profile and so on?
What we see, it's both a combination of family offices, business angels at the very early stage, and then even at the later stage. But I wouldn't go as high as saying a 5 million round for 30% of your company. There's venture capitalists out there that would do it at far more attractive terms for an entrepreneur as well. But even venture capitalists do fund cloud companies. I mean, all software as a service, I can name many of them. They're backed by European venture capitalists. Even the real infrastructure or hardware plays, there's still European venture capitalists that are willing to take hardware risk, even including with the capital intensiveness of the business. So I wouldn't say the typical profile is someone who understands that you're backing an individual and an idea, but that the individual is as much important as the idea. It's not just something that doesn't make sense. It's a business plan that is well thought through, that taps into, it's a must-have, it's a pain point in the market, it's an aspirin, not a vitamin. If you tackle a pain point, you will have customers, and on that basis, we still have many venture capitalists in Europe that are willing to back good ideas. But if it's not a good idea, it's not going to get funded.
But of course, we have been discussing during the coffee break that unfortunately our venture capitalists and investors, they do not invest in ideas, and like in Silicon Valley. Yeah, can you comment on that?
Yeah.
You want to go first?
Yeah.
I can go first because I just had last evening a discussion. I just had last evening a discussion, and there we asked, is there a business plan available? And it was a company in Silicon Valley, and he told us, no, it's we have a good team, we have a structure, we have a fact sheet, and you can invest in the fact sheet. This is something we will see perhaps also in the future in Germany, because I learned from my colleague here that we are facing at the moment really a tremendously growth in the venture capital business in Germany. And then perhaps we will also have the situation, if the team is good, it doesn't matter the idea, because this team will go straight forward with any business concept. And this is a little bit the structure we see at the moment in the Silicon Valley. So, and the reason is they earned so much money in the past with their VC activities that they can do it in that way. But doing it in that way, they are very, very fast. And they are much faster than we. But to overcome that, it's really a structural problem, I believe.
Just one comment on this. I guess it's already happening somehow in Germany and Europe, this kind of investments, but it's rather like business model, and the VCs are not investing in Excel spreadsheets. So the business model is not the mechanics behind in a spreadsheet, because usually you can write whatever you want to in 2014, how you're going to scale up, and it is just like the future. So people already invest highly like in the team itself. Is there the capability that they can succeed, and the idea itself, the pain points Bjorn just mentioned. And if they tackle the pain point and they can show it in the first, let's say, first 6 to 12 months, then they go through the next investment rounds. So it's happening already, kind of. And the only thing is, like, at the end, you invest in people. You're giving a sum into a group of people you believe that they can execute the idea. And then it's a question of if you want to start at the very early stage, like we do, there's just the idea, there's no product, and we help them to create a minimal viable product and then take the next step. Or there's seed investments where there is already a product which is taking up a little bit. Or there's then Series A, Series B, Series C, where they have already a proven business model.
So my question will be, should we create a separate seed capital scheme for cloud companies in Europe? I mean separate, I mean something which will be created, financial vehicles which will help really this new industry to develop quicker. What do you think, Kurt?
So my answer is a clear no. If the idea is not good, you shouldn't put a new fund. I have another idea, that is, if the tax regime was changed to actually make it more attractive for a wealthy person to put a couple of €100,000, that's the much better idea.
Any comment on that?
I would agree. First of all, there's already plenty of seed money out there. And again, sometimes it's not always about the money. Not always. Money still remains a big issue to start launching your company. But with 50 to 100,000 to get started, that you can find even with the triple Fs, the friends, families and fools. What you need is, you also need then the coaching, the people that have done it successfully. I don't want to go back to perhaps a bit to the past question. What's the typical profile of a cloud investor and a cloud company? I have an example in mind. I will not name it, but it's a company that provides a call center software in the cloud. So everybody can set up its cloud center like this. You don't have to hassle anymore with the IVR trees and whatever you have. You just set it up. You can add an agent as you want. And the investors in that were a bunch of people that had successfully sold their own company for $700 million. The company was called Message Labs. And some of the people actually from Message Labs then moved to that cloud call center in the cloud company. And they set it up from scratch, an idea. And then later on, that company grew so much, hit all the KPIs, each time beating budget. And then just recently, they attracted a $35 million round with some of the highest ranked investors worldwide. One European top brand name VC and one high profile US VC. That's the type of things that we see here in Europe. And that's all European apart from the larger rounds which were done by Americans. But we can build a company up on that level with brains, with financing in Europe. So there was seed financing available for this. You don't need to create a different seed program for this. There are plenty of seed programs around, but we need to provide the infrastructure also on the financing and the coaching level to let an entrepreneur be surrounded with the right people that know what it takes to secure your first customer. With people that knows what it takes to negotiate your first round of money, that you don't give away too much of the upside. And that's gradually building also in Europe. It's just a matter of getting mature. The US had 20 years head start in venture capital.
But don't you think, and that will be to join probably your answer also, additional remark, that we are too slow and too not really efficient in this financing, because my own observation, I'm a member of the European Economic and Social Committee, so I deal with this EU, let's say, big ideas, not very efficient very often. And on the other side, I manage a small seed capital fund and a consulting company introducing companies on the small cap market of the Warsaw Stock Exchange. And I see every day, we see people coming, early stage startup companies coming to see us and asking for money. But they are asking for 200,000 euro, 1 million maximum. Nobody will provide them such a small amount of money, because there is a lot of money available but for bigger companies, for companies with bigger valuation. What would you think about it?
I think there is plenty, especially for those tickets. I mean, you just have to look at all the big corporations, they all have their Accelerator program. They all have a venture capital arm where they provide tickets from 200 to 500,000 euro, and they are all there, and they are looking for people just to apply. It's a run on those accelerators out there. So I would say there is already plenty. There may be some countries where they're a little bit behind of this in terms of speed, but especially in Germany, there's a big scene out there. And another thing you just mentioned, that it may be not, or we are not efficient in this structure. I just want to mention Spotify, which is a cloud company, music as a service, and they are from Sweden, from Europe, and they are now one of the biggest companies out there in the last 5 years, and they were funded through Europe, and they are a Europe company. So we have already examples where they started small, but they grew to multi-billion companies, and Bjorn, probably you have a lot of other examples where this happened.
So please, I think also it's not possible, it's not necessary to build up just a venture fund for cloud business. We have to think about everything. It's all about cloud at the end of the day, and we have to focus on interesting application fields. And I think the venture capital arm is running very well in Germany at the moment, or in Europe. And I have a very nice example here, which kind of solutions could be also cloud-based. This is a Swiss watch. Typical Swiss watch, nothing else. Looks like a Rolex or something. It has a SIM module in it, so it's connected at least to the cloud. There's a cloud interactive voice system behind, and it could make security calls for elderly people. It's a Swiss company, funded by Swiss venture capitalists, running very well. One of the inventors of one of our innovation programs we are doing worldwide. It's a nice solution, and it's a nice example of what is possible if you focus in dedicated fields about cloud solutions. Which kind of API I can use, which kind of interactive voice systems, cloud-based phone solutions. You can use a lot of existing tools in the cloud to enable at least intelligent devices. And I think if we are looking more deeper in application fields and not talking just about a platform as a service or software as a service, we have to talk about Industry 4.0, we have to talk about automotive. These are the topics which could foster the cloud business at all, and so we don't have to focus directly on cloud, we have to focus on the application side.
Gentlemen, I think we have to, unfortunately, to close this discussion, because we have on the next panel which will start. I would like just to, maybe to finish, to ask you if you think that to exit strategy for these investors will be stock exchange or selling to big Americans, or what?
In terms of the accelerator of Allianz, we want to grow business which will grow within Allianz. Actually, we don't have this exit strategy that we build it and then we make a whatever valuation and make the founders rich. This is not one of our main goals. We want to grow the business with them in Allianz, and Allianz is so huge, serving in more than 70 countries, that this is actually the exit strategy at the first stage.
Thank you. And any comment on that?
I think it's up to the investor how he will create his exit.
Well,
so
we're not direct investor, but unfortunately the majority of our portfolio companies indirectly through the funds still exit via failure, but that's because we're taking risk. But that's just to
very encouraging.
No, but that's part of the model. If you don't take risk, you're not going to exit that way as well. Luckily, we're increasingly seeing that for each failure we have a number of good stories as well. IPO, I don't think you can build an exit strategy on an IPO. Nothing wrong with setting your goals high and then try to achieve them, but it's not realistic. And then as a venture capitalist or a backer of venture capitalists, most of the time the IPO is not a liquidity event. You're locked up for 6 months or 12 months, and hopefully then you pray that the stock market doesn't go down and that you can, once you're out of lockup, you can still sell your shares at a profit. So IPO, yes, everybody has the example of Google in mind, and I wish we had some more Googles, but we've also also seen in Europe that even with trade sales, we've done tremendously well. Skype twice, and even Autonomy being sold to HP. HP apparently is not too happy with it any longer, but it was a major success for European technology companies. And trade sales is just a route, and it's not always Americans buying. SAP bought Hybris Software at a very nice profit for the investors. So even European firms are increasing, corporates, they have to. They are increasingly buying startups and successful tech companies.
But I would discuss with this opinion, but unfortunately we do not have time. But we have successful markets such as AIM, this New Connect market in Poland, 400 companies listed already. We have the small cap market also in Paris. So it's not so difficult. And it's of course dedicated to small companies and to individual investors at the beginning. And it's via private offerings, not public. But of course, these companies are bankrupting also.
No. So the only thing I wanted to say is that listing is not the problem. Making money out of a listing is not always
I agree.
The easiest way.
Depends on valuation, initial valuation.
Yeah. As I'm the software entrepreneur on the panel, let me emphasize you shouldn't build your business around the exit strategy, but around value for the customer. So if that sticks, then you have to buy yourself time. So we on our side, we knew that whatever the cloud stories of Gartner and whoever is in this area of celebrating new trends, say it's going to be time. You have to deliver value for the customer over a decade, and then you have a sound customer base, you have recurring revenues, you have exactly what investors like in the spreadsheet. But if you do it this way, you will find there is not so much difference between the old-fashioned business before the cloud and the cloud business. So the cloud doesn't change the rules, it's just a new delivery model.
Thank you very much.